good afternoon. You're watching Closing Trades in ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the closing trades are looking very, very strong. We have the level of 24,800 on the Nifty. So the all-time highs on the Nifty yet again today. It is the Bank Nifty also, which is in the green, though the broader markets are a bit under pressure. But nonetheless, the frontliners in the large caps are doing all the action today, and specifically IT at that. Your TCS, LTIM, Infosys of the world, these are the ones which are seeing big amount of moves right now. In fact, Infosys ahead of its earnings is also in focus. Wipro, which comes out with earnings tomorrow, is also sitting with a gain of almost 2%. So clearly, IT leading the pack. Separately, you would want to put the spotlight on India Cements because that stock has been doing quite well since the start of the trading session. So it opened with a gap up of 4 to 5%, but from there it has built further gains. Right now we are seeing a gain of almost 8% on this counter at the level of around 350. Justal, which is a result reaction, is doing quite well. You also have CEAT ahead of its numbers, which is fairly excited. And talking about earnings, Polycab just came out with its earnings. Wasn't a great set, at least as far as the overall earnings are concerned. But that stock too has managed to recover from the lows of the trading session. Right now flat, but individual movers and the likes of EBB Industrials, etc. are the ones which are seeing profit booking today.
Oh yeah, absolutely. Was just looking at Polycab's numbers. In fact, for the first quarter, the revenue, or rather the profit, has come in marginally soft. It's a downtick of about 0.3%. Revenue, though, has come in higher by 21%. These, of course, are the year-on-year numbers, and it's not quite matching up with the street estimate. But that big spike up, Kunal, I guess is only telling you about the kind of appetite there is in the market for quality paper, that every dip gets swiftly bought into, and I guess that's why the Nifty is holding up the way it is.
Yeah, I think today's day is purely large cap names, because right from the likes of Reliance towards short covering and HDFC Bank, ICICI Bank and SBI, I think you have so many different sectors and stocks which are participating today, and purely large cap names. And many of the stocks are coming back into their multi-week breakouts, and some of them are coming out of the underperformance. Bajaj Finance, Finserv are the two names which have been a drag for the indices as such over the last many weeks. These stocks are showing signs of a breakout. So I think today's move is purely towards large cap name, and I think if we just manage to have one more day of participation, we could be inching very close to that 25,000 mark also.
Okay, point taken. So that's the new coming in as far as Nifty is concerned. But we also have Sandeep Sabharwal as well as Aditya Agarwal joining us on the show. Good afternoon, gentlemen. Thanks so much for making time and speaking with us. Sandeep, this market rally just continues to build on. One is just waiting for a dip to perhaps buy. Do you see that imminent, maybe after a budget, a sell-off is expected? Or do you think just deploy, don't wait for that dip at all?
Sense to wait. It doesn't like you can't buy stocks at all prices. So you need to buy, wait for the right opportunity. Now the opportunity will come. I think we are entering into a phase where the markets are going into a frenzied kind of up move, and eventually we'll see a sell-off come in. Now whether that happens next week, next month, very tough to predict the exact timelines, but I think it could also be correlated to a correction in the global markets, and that would also have a rub off in India. Because if we look at the results which have come out and the way markets have moved up, many things don't correlate. So I think right now it's a wall of money which is driving the markets. But then I think it makes sense to be cautious.
Okay, just looking at some of the other stocks as well, and Asian Paints too came out with its numbers. The revenue has seen a downtick of about 2%. PAT, though, has seen a downtick of 25%. EBITDA as well, 20% lower. And clearly, competition has sort of eaten into the market share, although they did say in the commentary that there is some rural recovery which is seen taking place. But Sandeep, you think, the competition started when Aditya Birla did come out with its, or rather announced its paint segment itself. And you did see an ease off in Asian Paints since then. You think part of the damage is behind us, or is there more to go?
I think there's more to go. If when I looked at the management commentary from Asian Paints, they seem to be dismissing the competition from Grasim. I don't think they should be dismissing the competition from a company which has a widespread distribution network, strong brand image, and they have invested 10,000 crores to set up plants to manufacture paints. So they haven't done it just for the heck of it. They want to take a big market share. Whether they'll be successful or not, time will tell. But in the interim, in their endeavor to take that market share, they will definitely cause margin damage in the market. So I don't think that the worst is over for paint companies. I would think that we will still see valuation derating coming into the overall paint industry, including Asian paints.
Infosys. Ahead of numbers. I mean, Infosys used to be the most anticipated number, and everybody used to be in attention waiting for the Infosys numbers. Aisha, wo din gaye, right? Infosys numbers, we all were in attention early in the morning.
I'm still in attention for all the
But
IT.
life hasn't changed.
Hasn't changed because I'm still as attentive to those numbers as any, because I'm hopeful that maybe things will turn around. But this quarter it should. People are expecting good set and good commentary from Infosys. Let's see whether they deliver.
But yeah, I remember traveling to Bangalore and anchoring out of that pyramid that they had for the media room.
No,
Those
it used
days
to
are
be this.
definitely
It used to be
behind
this
us.
quarterly affair where
Yeah.
you would prepare 2 days in advance for the numbers, and it's like by heart the numbers,
Yeah.
and then the numbers would come before the market hour, and the entire market, forget IT, the entire market would react. So Infosys comes and gives a profit warning. Ok, today's markets you can just ignore it. Infosys gives a profit surprise, then everything
Because
is
it's
rock
become
and
a
roll.
lot more broad based. I mean, more than half of the index is now out of services, as in manufacturing and other things as well, which was earlier only banking and IT, has become a lot more broad based as well. So I think domestic economy is also something which is firing up, and not just the global one, which you kind of read through from Infosys.
Yeah, the breadth is increased, variety is increased, contribution is increased, and Infosys growth has come down.
Yeah.
And nobody is like, really saying that, okay, I remember there used to be a fund called Birla Advantage Mutual Fund. I'm not getting into who the fund manager was, but Sandeep, you'll remember. There are two holdings, which were 50% of the total corpus, Infosys and Satyam, right? Or Visual Soft, 3 holdings, I think, which was accounting for 65% of the holding.
Yeah, I think so. That was a period where only so that was, I think, it was that telecom media IT. I don't know what it was called. I forget the acronym which was made at that time.
So, Sandeep, are we at that turn for IT where if you start buying now, the downside is limited and the upside could be higher than Nifty?
I think that's the trade markets are playing right now, that the worst is over. Now, from whatever commentary and results I've read and whatever is coming through, the worst seems to be over, but then there doesn't seem to be any significant uptick in performance which is going to come in the near term. And the stocks have rallied, I think, 10 to 15% across the board in anticipation of this improvement in performance coming through. So I think Infosys, like they're guided for 1 to 3%. If they stick to the 1 to 3%, then from here on, what kind of upside we can see, I can't really see too much.
Point taken. On that note, let's slip into a very short break with the news that the market is holding out okay. On the other side, we'll get the LTIMindtree management to join us. Well, IT is clearly firing up, and LTIMindtree is one of the reasons for that. Good show as far as execution is concerned, even though there was a bit of a miss on margins. But they've also signed this deal with the APSA Group about the banking space in Africa. Let's welcome on board Sudhir Chaturvedi, as well as the management joining us from the APSA board, Johnson Ediso. Listen into the conversation we had with them earlier.
This quarter for us, BFS returned back to growth with 2.6% quarter on quarter. And along with tech and services, BFSI and tech and services are 60% of our revenue. So a majority of our revenue returning back to good growth momentum. This is on the back of 3 things. Firstly, we are seeing that our clients have resumed, especially our banking clients, have resumed some of their high priority transformation projects that were paused during the last year or slowed down. Those are back on track and they prioritize the ones that they want to invest in. Which is really in the core area. So we see this as sustainable transformation spend. Secondly, we are seeing that clients are also doing vendor consolidations, and as part of the vendor consolidations, we've been on the right side of vendor consolidations. We've signed several new deals and master services agreements with clients, especially in the banking space, and that's reflective, and we are here to talk about one today. And third, but last but not the least, clients are making foundational investments in AI, and especially banks and tech companies, tech services companies, are making those investments in a way that they can start to leverage AI across everything that they do in the organization. And those three tailwinds are the ones that have helped us grow this quarter, and why we also feel that this growth is sustainable.
That's interesting. Let me then listen it from the horse's mouth itself. Johnson, it's great to have you on the show to get the perspective from the client side as well, to understand how things are. Because for the last 12 to 24 months, this entire sector has been clouded by uncertainty, delay in decision making, etc. How have things changed for you in the sense, how are you looking at decision making when it comes to the IT spends?
It's a real pleasure to be here, visiting from South Africa. We're a Pan-African bank, so we operate across the African continent. We're in 11 markets. South Africa is our largest, but we go from West Africa and Ghana to East Africa. We are still investing heavily into technology. The spend is up 8 to 10% a year. Why is that? Very simply, the African continent is a young continent. The average age is 19. Most of our customers, and increasingly our customers, are clearly digitally native, actually. So for us, the investment in digital, in data and technology is something that we are continuing to drive. Clearly, we use it to drive top-line growth, and then also clearly we use it to make sure that our cost of service, incrementally, we can control so that we can bring more and more customers and we can drive more and more financial inclusion on the continent.
Okay, that's the word coming in from the LTIMindtree management. In the meantime, just looking at some of the other names. Look at a HAL, look at an ABB right now. That's down about 5%. As the global parent did set out a warning, not quite correlated to what happens in the India business, but definitely a sentimental knee-jerk on the stock, down about 4.5% as we speak. Dixon is down about 4.6%. Siemens is down 5%. HAL is down nearly 5.5%, and Trent as well, down by about 6% or so. Sandeep, forget the longer term for the market, but come Tuesday and we'll have the budget. Makes sense to lighten positions, and are you anticipating anything big out of the interim budget this time or not?
Yeah, so the expectations are high that there'll be some tax relief coming through. Whether the government will deliver or not is something we need to see, because the next budget will be just, I think, 5-6 months down the line. So whether they do something now or they decide to do it at January end is something which we don't know. Tax relief for reviving consumption is absolutely essential, because consumption is one part of the entire growth basket which has been deeply lagging. In fact, consumption growth has been half the GDP growth, which ultimately cannot. So ultimately, GDP growth cannot sustain unless consumption revives. So that's something we need to see. Markets have been rising almost every day. This kind of frenzied rise will not last. So I think people who have a short-term orientation need to be very, very careful right now.
LIC is trending up smartly. I'm just looking at the screen, but in terms of the, what is this? MTNL is up 20%. Why? I don't know.
Well, I guess the reports that perhaps there is going to be rehabilitation of that company or some merger, etc. on the cards. I think this stock moves on all of those kinds of news. So
is also up 18%. Why?
It's only 20 times jump in volumes for MTNL last 4 days. Average is 20 lakhs. Today it's clocking 14 crores, but on an average 4 crores to 5 crores.
You know, I've seen crazy moves in my life over the years, but there are some times when you've seen like a different definition of craziness, and let's establish that. Let's look at TTML from 2020, and you've seen in 4 years a boom and a bust and a comeback trail. Let's look at TTML. I don't track it. It's a Tata Group company. It's exited its fixed line business. Now that is TTML for you. From 2020, please. This is 2021. If you look at TTML 20, not 21. It was almost like a 20 rupee stock, and from there it went all the way up to 290 rupees. Kunal, do you have that numbers with you, like August 2020 or January 2000?
For
TTML, let's look at it. What was the low, COVID low for TTML?
1.8, I think I can see. March 2020.
2 rupees, right?
2 rupees.
2 rupees went to
Less
300
than
rupees.
2%.
Yeah, it went to 290.
Yeah.
That was the high.
100x for TTML in a matter of just 3 years. And from 290 it came down to 50 rupees.
50 rupees.
And 50 has become 96 again.
Correct.
Now what is coming? Please tell us.
I don't track this one.
It's one of those Vodafone kind of stories, right? I mean, obviously the stock was above $100 also at one point of time, dwindled to the levels of $10. Now
2
close to
rupees
around
became
60.
290. 290 came down to
Okay,
40.
2 became 290.
2 rupees
Oh.
became 290. 290 came down to 40, 50 rupees. It has become 95 again. Sandeep Sabharwal, when it is difficult for us to find answers, we always look up to you. Please help us. TTML.
I think the answer to this lies with the punters who are playing this stock or God. I don't know anything about it.
What about Paytm, Sandeep? Has it moved beyond the image of just punters playing it?
Paytm, unfortunately, is a story where the future seems very, very hazy because the only reason they were delivering all sort of profits last couple of years was due to the loan origination business. So as that comes under threat, and as the entire wallet business is under threat, so I don't know what's going to happen. I don't think it's going to be an easy journey for them.
Okay, not an easy journey for Paytm, but for our MCX is seeing quite a bit of jump in the trading session. So it's up almost 3% in the last few minutes itself. Let's pull up the intraday chart of MCX. Yesterday, remember, there was that ease of trading commodities which happened because Zerodha has also institutionalized some of the commodity trading mechanisms. So that might mean just more volumes for this entire entity and the commodities vertical. So that stock is higher. You also have Reliance Industries, which is reacting positively. Though Havells just came out with numbers. Let's see how that stock is reacting to its earnings, and Polycab is the other one. Aditya, any sense as far as some of these cable companies are concerned, Havells, Polycab, Finolex, etc.?
Good afternoon, Anisha. Oh, clearly, all these stocks have seen a sharp run up in the recent months. It's more of a consolidation that we'll see in all these stocks, be it a Polycab or a Havells or a Finolex. At current levels, they don't offer an excellent risk to reward to initiate a fresh long positions in either names. I would like to rather stay on the sidelines. If you're sitting on decent profits, not a bad idea to book out partial profits and sit on the sidelines, maybe wait for a dip closer to about 1700 on Havells. If I talk about Polycab, maybe another 5 to 6% downside from here on 6,000 round is a good support area. So I'll not be in a hurry to get into any of these stocks at current levels. Wait it out for a correction, and that will happen very soon. Maybe next month we can expect that.
In the meantime, just looking at some of the other buzzers, and while of course the trend today remains with some of the IT earnings reactions, the jump in LTIM, the follow through in TCS, but other than that, and India Cements has perked up a good almost 10% now on the futures. There's Manappuram, which is holding out very well. Chola Finance is looking very smart indeed. There's of course Bajaj Finserv looking strong, ONGC, Unilever. These are all trends that you're foreseeing in the market right now. Sandeep, are you with the FMCG trend? I know we've talked about some of the rural exposure plays, Dabur, etc. But have you added more in those names?
So I think the easier plays were Dabur and Hindustan Unilever. So they have now moved up. Now we need to see the actual results and commentary to see whether they can build on gains from here on also. Other stocks which had moved up earlier and where we need to look for better opportunities will be something like a Godrej Consumer or something like yeah, I would say Godrej Consumer, Jyoti Labs on the mid cap side. I think the trends we'll have to evaluate to see whether we can enter now.
Thanks, Sandeep, for joining us today. Appreciate your time on the show. But let me take the closing trade ideas from our technical experts. Aditya, what's the view on the market first up? And what are your top bets which you would recommend as a closing trade idea?
So it's more of a consolidation breakout that we're seeing in trade today. I won't jump on the markets, to be very honest. Maybe it's more of a stock and sector specific that we are looking at trades. IT is buzzing, FMCG is buzzing, few select cement stocks are buzzing. So maybe these are some of the pockets that I would like to continue to bet on, maybe few large cap private banks as well. Apart from that, it's a very select market, and I would like to stay away from trading the indices, to be honest, because beyond 25,000, I don't see markets going too far away. Can see a correction all the way down to 24,000 and 23,700. Bank Nifty something that may inch higher, closer to about 53,000 on the upside. So banking index, if I have to play any index, I would like to go long there with the stop loss just about 52,200, 52,300. Maybe I'll go long for a target of 53,000. As far as trading ideas are concerned, I've got a couple of buy recommendations. One is Pidilite Industries, again, from the consumer and fast-moving FMCG space. Stocks are looking interesting. So Pidilite is something which is looking very interesting on the chart setup. Can test levels of 3,300 on the upside with a stop loss at 3,150. I would recommend a buy. The second stock is a Birlasoft. Again, like I said, IT is clearly leading the charge. So at current levels, one can go long on Birlasoft for a target of 800 with a stop loss at 725.
Right. Kunal, what about your strategies?
So I'll go with a buy on ONGC, a stock which I've been recommending over the last couple of days. Even at 325, 330 where it's trading right now, looks very strong. I think this could probably be a potentially a strong trending move for ONGC, not just a breakout move.
Okay, point taken. For now, the Nifty continues to be above that mark of 24,800, no stopping the rally there, and the Bank Nifty too has managed to perk up quite meaningfully from the lows of the trading session. We're staring at a level of 52,666. Our last 30 minutes of trading session left. We'll track that when we come back.
Back with closing trades right here in ET now. At the high point of the day, well above the 24,800 print for the Nifty. So what started off as a very quiet, muted day, dipped a little bit into the red. From there, we've picked up quite nicely thanks to names like TCS and ONGC, which are contributing a whole lot to today's move. And Infosys as well, with almost a 2% move coming in on that stock ahead of its numbers. But let me take it across to Ansh. He's been mapping some of the volume buzzers from within the liquid universe. He joins in with more. Ansh?
So LTIMindtree will be the first stock in focus as the stock has given a breakout from its horizontal resistance zone of around 5,600 mark, which was intact since start of Feb. In addition to this, the stock has also touched 6-month high with good volume of over 5 times its average trading volume of last 10 session, indicating good participation in today's breakout. Apart from this, Industar will also be in focus as the stock has given a breakout from its short-term rounding bottom chart pattern, and the stock has also touched its 6-year high level today with good volume of around 2 times its average trading volume of last 10 session. Lastly, Bajaj Finserv will be in focus as the stock has given a breakout from its reverse head and shoulder chart pattern, surpassing about 200 DMA, indicating good positivity in the stock with good volume. Apart from this breakout stocks, there are high chances of India Cement, HAL, L&T Finance, Steel Authority and Industar to get into ban list for tomorrow. So keep an eye on these stocks.
The ABBs of the world, they are really taking a whack today. BHEL, BEL, Dixon, ABB, Siemens, all of them are down in a sizable manner. Take the Nifty out, the market breadth is not strong. Let's look at the market breadth actually. NSE market breadth, it should be tilted or should be even Steven. I'm just taking a guess looking at my screen. Let's look at the market breadth if you can have it please. Yeah, you've got a big fat decline. The donut is like more red and less green. Is the first telltale sign, Kunal, that mid and small cap stocks are getting tired because you're underperforming on a day like this?
Yeah, I think they're getting tired, but the balancing out is playing back again to the large cap names, because that's where you're seeing a fiery up move coming back into a few large cap stocks. And many of these stocks, they were going through their own patch of consolidation. So even if it was the likes of Reliance Industries, where over the last 4-5 days, the stock was getting into a drag, ICICI Bank was getting stuck at that 1220, 1240 mark. That stock has seen a breakout. You've seen Bajaj Finance, Finserv heading towards a breakout for themselves. FMCG stocks overall have done reasonably well today, and even the likes of IT stocks. So, and we're talking about the larger cap names over here. So I think this move is getting balanced out, and maybe this could be a sectoral trend in the making, because after the first hour of a bit of a corrective wave for the indices, the way the markets have picked up is clearly an indication that we are tilting back again to the large cap names. So even if we see a couple of days of further up move for these large cap stocks, I think that could probably balance out the pain or the tiredness into the mid cap names.
Okay, point taken. Just tracking some of the other big buzzers in the trading session, and you do have Fortis Healthcare, which is perking up in the last 2 minutes. Let's see if it's actually showing up on the charts as well. Macrotech Developers is the other one, which in the last 2 minutes has moved up, and Policy Bazaar is the other stock in focus with respect to the move that we are seeing. CSC, that's showing a bit of a downtick. Let's pull up that one. Is there a meaningful downtick on CSC right now? Not as much as my screen was suggesting, but overall, there are individual names which are actually quite active. Kunal, what's the view on Policy Bazaar and even the other one, India Cements? What does one do with that?
So I think Policy Bazaar is a case of a breakout now because after 3 weeks of the stock remaining to a range 1500 as a top, and I think 1400, 1420 as a support, the stock now seems to be coming out of a breakout. Today's volume move is also quite interesting for Policy Bazaar. So that generally is a precursor of the stock starting to show signs of an ending of the consolidation, then moving up higher. So that's a very positive sign for Policy Bazaar, and expecting the stock to now break past about the 1500, 1520 levels, which should be a good 60, 70 points at least from current levels also. India Cement, again, a very similar kind of a move. So I think what we're now seeing is many of the cement stocks getting back into breakout move. It started off with Ultratech Cement starting to look very attractive. India Cement, a couple of weeks back, was a stock which was, I think, moved up 20% in a matter of 1 or 2 days on the back of some very high volumes. The stock moved from 220, 240 mark to almost 280 levels, and now it's surpassed the 300 levels quite comfortably. So I think it's a stock which is now into motion and looks quite attractive from a short to medium term.
It's a funny coincidence, and funny is not, I'm using it purposely. Just Dial 20% up, MTNL 20% up, TTML 20% up now, On Mobile 10% up. All of them have something to do with telecom, and all of them have got no relation. MTNL is owned by government, TTML is owned by Tatas, Just Dial is owned by Reliance, and I'm not sure who owns On Mobile, so I'll keep it there. 3 stocks, same pattern, different businesses, different corporates, and it's a funny coincidence, right?
Yeah. For MTNL, of course, the government has deposited 92 crore rupees in that escrow account, which was a little questionable to pay that bond interest dues. And now the market is speculating whether MTNL revival could be up next or not. I don't know what's the trigger for the other names, though. Devang, any buzz that you're picking up on MTNL, though?
Thanks for having me on the show, Aisha. No, particularly nothing specific that I'm picking up on that, and not tracking that as closely.
Tata Communications just came out with numbers, so that stock is in focus as well. Overall, looks like a steady set, so nothing much to complain. But the big boy Reliance will come out with its earnings tomorrow. Jio Financial Services already came out with earnings. So of course, there's very little to say as far as earnings is concerned for Jio per se, Jio Financial per se. But Devang, what's the expectation with respect to RIL, and do you expect any sort of additional announcement? And I'm hinting at the possible unlocking value with the various entities. What are you watching out for?
I think what we have seen is particularly very importantly, most of these companies who were sort of underperforming before the elections have started to also outperform. So be it Reliance, be it banks, be it FMCG companies, be it AgriPlay. Particularly about your question about the earnings of Reliance, I think Jio had a decent set of earnings. While most of these segments that Reliance operates into, be it telecom, be it retail, or be it the traditional oil and gas, or the O2C business, oil to chemical business. I think most of these businesses are doing well. There are empirical evidences of a couple of quarters where you saw one business not doing well, but it was sort of taken care by the other business. But now I think the market is expecting also the listing of maybe something like the telecom business, which we always talk about. I think most of this sort of are triggers for Reliance, because last couple of months, 2 to 3 months, we have seen not so much of outperformance from this type of large cap giants. With FIIs coming back, I think mostly we have seen good flows from FIIs as well. There is good enough flows that is also going to be directed towards the large cap segment, and particularly I think markets have its sight on Reliance for further cues that the market goes up from here or sort of stabilizes. So I think it's an important market leader from here on, and I don't think the numbers would disappoint on any front.
Okay, that's the take coming in on Reliance, which by the way is holding quite strong right now. Let's just bring up the intraday graph as well and show you. Off the day's highs a little bit, but still going strong into its earnings, comfortably around that 3,200, 3,150 odd level. Aditya, would you have a take on Reliance? What's the reading on the charts like?
A very strong looking one, Aisha, without a doubt. And if given a chance to buy Reliance at current levels, I would stick my neck out and put a large chunk of money in Reliance. Even on declines to closer to about 3,100, I wouldn't shy away from adding onto my position. Because if I take a look at slightly longer term time horizon, maybe 3 months from here on, I see significant upside in Reliance, maybe a 3,600 to about 3,800 on the upside is what I'm eyeing on Reliance. On the downside, I don't think so it will move much below 3,000 odd levels. So closer to about the current levels to about 3,100 are good entry points for Reliance, and buy and hold it for at least maybe a quarter or so, and you will see very good returns in Reliance Industries. That's what the chart setup tells me, Aisha.
Gold financiers, that also was in the radar, was on the radar of Jefferies because they initiated coverage on those counters. Manappuram and Muthoot both, they were more positive on Muthoot versus Manappuram, but right now both of those stocks are doing quite well. Aditya, a quick word as far as the charts are concerned of some of these gold financiers.
No doubt about that. But if I had to pick one, maybe now I will go for a Manappuram Finance, purely going by the chart setup, because that looks like more clear breakout there. And I think stock can test levels of 260 on the upside, with a good support on the downside at around 215. Talking of Muthoot Finance, maybe on a decline to about 1,800 to about 1,780 is what I would eye on Muthoot Finance, and then I would go ahead and go long on Muthoot Finance. At current levels, maybe Manappuram looks more attractive to me.
Some of the other names which are in focus is also Aisha. Remember, it was in focus because of the Gorilla 450 launch, which the market now anticipates is going to provide that upgrade option to their current portfolio, that of 350cc Royal Enfield owners as well. Having said that, a start of trade, most of these two-wheeler majors were in the red, but now you can see a pickup with the rest of the market that Aisha is actually holding out. What's Bajaj Auto up to? Because they as well got a decent amount of inquiries for their recent bike as well. So bring up that stock. The CNG bike, which is Freedom 125, which has just been launched as of last week, that got about almost 30,000 inquiries in a week. Now, inquiries, of course, doesn't translate into sales, but that stock as well has lifted off from the session lows regardless. Kunal, on the charts, how are some of these names looking? Aisha, Bajaj?
I think Aisha is something which is looking interesting. I think that stock is now confirming a triple top breakout. 4,900, 4,950 was a resistance the stock had tested twice in the last 3 months. And the previous attempts, for example, in the first leg of downtrend, the stock had come back towards 4,600 as a support for itself, 4,450 as a support for itself. In the next leg, the stock made a low of 4,600, which means with every move, every retest of the 4,900 mark, the stock was making higher lows. And this time around, I think the stock is confirming a breakout about the 4,900 level. So this could be at least a 400 to 450 pointer up move for Aisha Motors. So I think even as a breakout play, the stock looks attractive for 5,500 as a target.
Fascinated with what's happening in some of these telecom stocks, and these are not service providers. I mean, TTML is not in the fixed line business, but call it coincidence, call it frenzy, call it just a funny move, but just dial TTML, MTNL on mobile. They all are moving up in a synchronized manner. Aditya, it's cement which is turning out to be the sector of the day, and frankly, cement, it's been a late bloomer. It's only last 1 month you've seen action, let's say in India Cement or Mangalam Cement or other cement companies. Is cement looking good for a clean run now?
Absolutely. I think this is one space, where one can still focus on, Neeraj, and I think so, Nikunjan. I think so. This is one space which will make money for investors and traders both. Though there are few pockets which have already moved up within the cement space, names that you pointed out, but there again plays in cement which I think can still be bet on, and can money making opportunity still lies in them. Shree Cement is something which is looking very interesting to me on the chart setup. At current levels, one can initiate a fresh long positions. Looking looking for a target of 31,500, about 32,000 on the upside. ACC is also looking very interesting to me, even though that the stock has run up quite a bit. I think so the recent consolidation is a buying opportunity in this stock, and on the upside 3,000 is something that I'm eyeing on ACC. So both Shree Cement and ACC look very interesting to me, and I think these are two names within the cement pack which should give you decent returns in the coming times.
Okay, so cement clearly is one space which is seeing a lot of action right now. What else is happening in the market? Well, of course, IT is that sector which is in a bull run of sorts. But Devang, what's your view? Is this something that the street should really bank on, the kind of commentary that we are getting, or is it the case that the underperformers are the only place to hide, and that's why we are seeing those big moves on LTIMindtree, TCS, Birlasoft of the world?
I think there is reasons. There are reasons beyond this, as you rightly said. One, the laggards have come back with a bang after the election verdict that we saw. There was a lot of talk about sector rotation happening, and that has sort of started to happen a bit. FMCG, consumer, IT, telecom, all this have come back with a bang, and IT particularly, the street had gone with low expectations. I think growing at 2.5% constant currency revenue growth does not sort of give you 5-10% type of moves that we are right now seeing. But this sector has been a laggard. There has been a distinctive improvement in the commentaries of this managements that we have seen. I was just listening to LTIMindtree also talking about there has been some improvement in sentiment, at least in the BFSI side of the business as well. So I think, yes, most of the stocks had not done anything spectacular in the last 6 months, 1 year. So they are sort of coming out of a multiple period of, or rather extended period of underperformance and hibernation. So my sense is that at reasonable valuation, they used to trade at 35, 40, 45 Ps. The Ps have normally compressed at this level. So I think there is a bit of interest on the street if somebody wants to make that extra 10, 12, 15% type of returns over the next 3-5 years. This stocks probably deserve that type of a 12, 13, 14% type of sort of returns CAGR.
Okay, given that it's big boy Reliance, which is set to report its numbers tomorrow, although post-market hours as always, let me take it across to Samit, find out what the street is penciling in and what his ET Now poll is projecting from Reliance for the first quarter. Samit?
Well, on a sequential basis, we are not expecting a good set of numbers from Reliance Industries. If you see on a consolidated basis, the company's EBITDA is expected to fall by around 6.5%. EBITDA margins are expected to come in lower at around 16.8%, while the net profit drop is expected to be anywhere between 13 to 14 odd percent. Now, the reason behind this drop is the weaker performance coming in from the refining segment and the oil and gas exploration segment. Now, the O2C chemical business EBITDA, if you see, it is expected to drop nearly 20% on a sequential basis, and this is purely on the back of the fact that the Singapore gross refining margins were lower by nearly 52% on a sequential basis. The oil and gas exploration EBITDA, that is expected to drop around 7% on a sequential basis, and this is because of lower production number coming in from KG-D6 and because of sequentially lower prices of gas in the country. When it comes to the retail segment, that is expected to see an increase in its EBITDA number for around 2% and this will be purely on the back of store addition and new brand addition that the company has been continuously doing so far. When it comes to Reliance Jio, that is a telecom segment of Reliance Industries, that is expected to report the highest growth on a segment wise. If you see, 2.5% growth is what the street is expecting in, and this will be purely on the back of marginally higher ARPU and the subscriber growth. ARPU number is expected to be higher to around 182.6 rupees per user per month, and this is a kind of this growth that we'll be seeing in ARPU will be for the first time in the last 4 quarters, and this will be purely on the back of higher subscriber, higher data usage, and because of more broadband users coming in on its network. Subscriber number is expected to be around 49 crore. Now, though we are seeing a subscriber growth for the 9th consecutive quarter, the subscriber addition number is lowest in the last 5 quarters. Now, apart from the numbers, the key thing to watch out for would be the management commentary that is coming in on how consumers are behaving post the tariff hike is important to watch. Apart from that, what is their outlook when it comes to the refining and the petrochemical margins, what is their roadmap for the new energy business, and what is their capital expenditure outlay for FY25 would be keenly watched from Reliance Industries earnings.
Okay, point taken. So that's the expectation as far as Reliance is concerned. But clearly on the losing side, Z is one of the parties which is down 9%. UTI AMC has suddenly dropped 6%. And then the entire PSU basket, the HALs, Titagarh Wagon, Railtel Corp of the world, all of these stocks are down. Interestingly, Oil India after that big rally has also seen a bit of a pause. Devang, what's the view on some of these energy companies? Because the likes of ONGC, Oil India, BPCL, HPCL, that become favorites of the markets. Do you see some sort of pause in that rally?
I think yes, this is a healthy pause. According to me, what we are seeing today, we are seeing a lot of even capital goods businesses, a lot of this oil and gas businesses, some of them being sort of even oil retailers. We are seeing a bit of a correction over there, and so, as I said, the sectors are sort of changing. This looks to be more of a healthy sort of a correction where people are booking profits where they have made huge money and are shifting that capital to somewhere else. Before an important event like budget, I think if markets are going excited and buying even large caps while booking a bit of profits in the mid caps. And again, as I said, this is not a phenomenon that we are seeing since long, but it's happened in the last couple of days only. With even Nasdaq falling, and we are still seeing our markets doing well. I don't read too much into it. This may be a short-term correction aberration. People would like to just go into the budget, taking some profits where they have made huge money, and then again, I think the rally can start if everything goes fine.
SBI, we were discussing in the morning that it was a good Monday, it was not a great Tuesday, and then Friday, Thursday follow-up is there, which is up by 1.5%. I distinctly remember you said that you will wait for one more day of constructive action.
Correct.
Is today's price action constructive enough?
Yes, for SBI it is constructive enough because today's volume is higher than the volume which was seen on Friday when the stock had ebbed off or seen a marginal retracement, I would not say a correction. And today the stock has managed to break past about the 2-day, 3-day swing high. In fact, it's almost at a 1.5 odd month high, just nearing to that June 3rd, June 4th close for itself. So that again is an indicator that the stock is now seeing a follow-through up move. The good part about the stock is that the RSIs and many of the indicators have now come back from a neutral or negative territory to now bullish territory. So that should also aid the move further for the stock. And this actually comes with a at a point where the bank nifty which was underperforming, I think should now get a leg up. So I would probably believe that SBI should play a strong as well as a key role for the bank nifty to now come back to the previous size of 53,000.
Just want to take a look at what GMR Airports as well is up to. The June update is a little bit of a negative given that, month on month the numbers got impacted because of the seasonality factor, monsoon season. So you're obviously not having as many flights. Having said that, they managed to handle about almost 10.6 million passengers across all of their airports. And that's an uptick of roughly about 8% on a year-on-year basis. And the stock has just about consolidated today, down about 0.8%, around 96 mark as we speak right now. Devang, just very quickly before we move forward, GMR Airports or Interglobe Aviation, where is it that you have better valuation comfort and what is it that you would recommend right now?
I think a little different from this. Of course, GMR Airports is also linked to travel, and Interglobe Aviation is also linked to travel. But a bit of a different theme, a proxy is what we like. We like the hotel businesses per se. Companies like Indian Hotels, companies like EIH. Now, why I say that? Because most of these companies are now becoming are sort of now getting out of that leverage cycle, and the models are also getting quite efficient. That they are not getting to use a lot of capital. They are giving it to certain other companies and just doing what they know the best to run the hotels. Also, the demand for hotel room is rising by around say 12 to 13%, and the supply is rising by 3 to 4% with the advent of spiritual tourism, inbound tourism, religious leisure, as well as this corporate travel. I think this is an industry which will sort of do well with operational efficiencies again coming back and ROE is on the rise. So my sense is that apart from aviation and airports, which are no doubt not a bad sort of place, but the clear winner can be the hotel industry, which has started to sort of come back with a bang.
Let's get in some BTST trades as well, before we move to the last lap of today's trade. Kunal, what's on your radar?
So Bharti Airtel is the first stock which I would recommend as a buy. The stock crossing levels of 1500 or just about on the verge. So would suggest a buy with 1525 as a target. Stop loss at 1460. And SBI Life is apparently one of the best performing stock from the insurance pack in the last 3-4 weeks. The stock has comfortably made a new high, breaking past over the 1600, even 1650 barrier today. So buy with a target of 1700. Stop loss at 1620.
Right, Aditya, what about your BTST ideas?
So I got one buy recommendation, Bajaj Finserv, very interesting looking chart setup, Aisha. After long consolidation on good volume, stock is broken out, trading above all its major moving averages. I think it's poised to test levels of 1800. So I would go ahead and buy the stock at current levels. Look for a target of 1800 with a stop loss at 1600. Looks interesting. The second stock is Tata Motors. That is also looking very interesting to me. I think so. A good consolidation breakout is what we are seeing on the stock and on the verge of a breakout from a channel as well. So preempting a breakout, I think one can go ahead and buy at current levels, look for a target of 1070 on the upside with a stop loss at 1000 on the downside.
Some recommendations coming in, but Devang, any fresh ideas that you have managed to look at, maybe just around the budget, maybe looking at the earnings season, anything that catches your attention?
Will stay focused on, as I always talk about, the three C's, and you can add a couple of C's more to that. The C's, one is almost the consumption side of it. I think the consumption side of it will be probably revived post-budget. And of course, you can't take a speculative call on that. But mostly you're seeing the rural side of the economy also starting to do back. Monsoon has so far generally been good. So as I said, one is the consumption, be it discretionary or non-discretionary. The second C belongs to capex and hence capital goods and all, which are going through a phase of hibernation. But I think this will also come back with infra spending. The third C being credit growth, right? So you are seeing a lot of credit growth related companies, be it banks, be it NBFCs, also starting to do well. And add two C's to it, which is corporate profitability and companies with cash flows. So I think these are the themes that we still keep and sticking to basics. I think most of the companies fall under this radar.
27, I mean, I would say just 200 points and then 25,000. अब की बार निफ्टी होगा 25,000 पार, Kunal. It looked like a very different idealistic number at the beginning of the year. Like a high, tall order, big high watermark.
No, I think we discussed 25,000 on the Nifty.
But that was supposed to be happening
just post-election. But that was supposed to be post-elections.
The pre-elections.
Post-elections.
We discussed it after the UP election.
2 months.
After we discussed in Jan,
Okay.
and the view was that it will touch 25,000 before election. But it's okay if it happens after elections.
Yeah,
it's okay.
2
Ho raha
months.
hai. Doesn't matter here and there. But yeah.
No, I think it tells you the kind of, and you know, the best part about the move in last 6-8 months is the sector churn. Underperforming sectors making a comeback, stronger stocks making a next leg of up move for themselves. Whether it's the the PSU theme, which has done phenomenally well. Many of the private sector bank stocks have made a comeback. Reliance has made a comeback. That stock I think is up 20% plus so far this year on a YTD basis. So I think many large cap names making a comeback. That's adding to the durability.
Okay, Aditya, we'll let you go on that note. Devang, Kunal, both of you, thanks as always for taking the time out and joining in. Let me hand it over to Vinny to map up, how the closing trades have panned out today. Vinny?
So an interesting day that's coming up because yes, Nifty managed to touch the 24,800 mark at one point of time, slightly off that level right now, but 7-10% of an uptake. And this, momentum of gaining momentum, the market saw it coming in the second half of the day. We started seeing an uptick coming in. Sensex 2 closing with gains of 81,300, and this is the first time that the Sensex managed to touch even an 81,500 at one point of time. So yes, off the day's highest point is what the Sensex and Nifty is closing at, but comfortably on the positive side. Nifty Bank saw a very sharp recovery as well, almost a 500-point recovery from the day's lowest point for the Nifty Bank, and 0.4% of uptick that Nifty Bank will be closing at. Different story coming in for the broader markets. Nifty mid cap as well as the small cap both closing in the red. Nifty mid cap down 1%, small cap down more than 1% as well. So yes, keeping an eye out on that. Today what is interesting is the Nifty IT as well as the FMCG side that was buzzing in trade. Nifty IT hit that 40,000 mark and will be closing that at those levels for the first time ever. Nifty FMCG holding on to good gains as well. So IT names, we'll be watching out for Infosys obviously on the back of its numbers. LTIMindtree reported the numbers yesterday, so keep an eye out on that one. We have TCS that's buzzing in trade. All these IT companies today surely cheered up in trade. From the FMCG side, let's pull up something like a Marico, HUL. All of them are also managing to hold on to gains. So yes, FMCG was the other one which was buzzing in trade. While what didn't do well today was Nifty Media, and we had clearly seen some pressure coming in on Z Entertainment as well. So watching out for that one. 8% downtick right now for Z Entertainment. Not much of a move that we are seeing there for Z. Other than that, on the flip side of what is not doing well today, we had some of these other companies from the Nifty, whether you look at a Coal India, Asian Paints on the back of its numbers, subdued volume growth is what we saw for Asian Paints. That's why down and out. Other than that, Hero MotoCorp, Grasim, Bajaj Auto, all of them under pressure. Gold financiers, let's pull that up. Manappuram Finance, Muthoot Finance, where they will be closing at, because that also saw a good up move coming in after we had a brokerage note initiating coverage on them. Muthoot Finance giving up those morning highs. But yes, that's how we'll be closing the day. Nifty at 24,779, up almost 0.7% in trade.